Hello, this is Martin from Secrets, the channel for learning about investing and trading. Welcome to the weekly market analysis for September 27, Monday 2021. If you're not subscribed, please subscribe and share it to your friends. It helps us a lot and doesn't cost you anything, and your friends can benefit, right? So let's get into the analysis. So don't worry, we have the slides, screenshots in the coming slides, and we'll just look at the price action and the patterns right away. So Nifty formed a weak green candle with nearly 2% of bounce, right, from the previous dip that happened, right? And this is after making another all-time high last week. So in all, 1,150 points of move happened just 4 weeks time. Can you believe it? Bank Nifty also formed a green candle, no? So it also had a hockey stick bounce, no? Hockey stick pattern, no? That kind of bounce that happened from that dip, right? So that was from my previous support region, and then it. But the thing is, it ended up at the same level. Though the previous high got stuck there. It closed at the previous close, right? So it hardly moved last week, Bank Nifty, although it did bounce from the bottom, right? It moved up from the bottom, but no, it did not move above the previous close or high. That's actually the weekly candle for the Nifty and the Bank Nifty, right? So the Nifty, the daily candle, you can see it's a spinning top. Bank Nifty also is a spinning top. Nifty is just 52 points away from the 18,000 psychological rounding number. Can you believe that? 18,000, right? But the spinning top on both the indices is a well, and that too at the top of a rally after making an all-time high. Now, Bollinger Bands, if you see, it shows the volatility expansion. It has already expanded and smoked on the bands for both the indices. This is what we are talking about. This is a daily candle. On the left side, Nifty, you can see the spinning top. Right side again, another spinning top on the top. Right, look at the reversal of last 4-5 days. A hammer, bounce at the support, and then bounce back. Last week we talked about change in polarity. That's exactly what happened here also. It bounced from the support region, which was the previous resistance, and then moved up just like that 5 days, right? But here you have the closing had happened the same high and same close, right, as the previous week, exactly, right? So the exact V shape is what move that has happened with the Bank Nifty also V shape. Weekly green wide range candle on Nifty on the left side. Right side also Nifty shows the bounce back. It's kind of a hammer. The wick side shows the bull presence on the recovery bounce that happened. Now, Bollinger Bands, you've seen that it is expanding and working on the bands on both support resistances. You can look at this chart and see. The first support would be on the Nifty is 17,650, 17,700 range, and then you have 17,350 and 17,450, that range will breaks, and then 17,250 and 17,300, and then below that you have 17,000 to 17,150. Resistance supports where it has got stuck right now at 17,950, which is a FIB 38 projection, and 18,000 rounding number after that, and then you have above that you have 18,250, which is FIB 50 projection levels. Make a note that the support right now is a gap support also, right, downside. Others are all previous swing lows and then Fibonacci retracement levels that you can see for Nifty, right? The Bank Nifty 37,700 is the immediate support downside, and then if that is broken, then you have 36,900 to 37,200, near to 37,000 is well. And if that breaks, then you have something near to 36,300, 500 range, and then 36,000 range, right? So 36,000 range is Fibonacci 23 retracement level at previous swing low and all this. But the immediate supports are seen at the previous resistance areas and swing lows at 36,300, 500 range. Resistance on the upside is 38 to 200. Then above that 38,850, which is a FIB 38 projection. Then you have 39,000, which is a rounding number. So these are the support resistance for the Nifty and the Bank Nifty. Hope it helps you to plan your trades for the options and derivatives and whatever, right, for the next week based on these levels, right? Your exit plans has to be based on this, and entry plans also. So this is what we are talking about. The support and resistance are clearly seen here. An all-time high, spinning top. Then you have the support region from where it broke out previous week. Then below you have the swing low levels, swing low second level. Then you have the resistance rounds previous. Similarly, Bank Nifty, You can see in there it is stuck at the previous resistance at 37,900, 38,100, that level. Then you have the previous swing low level of 36,900, which is a support, and then another swing low level 36,300. That is what we are saying. So momentum and the trend analysis, if you do on the Nifty and the Bank Nifty, it's clearly bullish in all time frames and on both indices. Now we identified last week that there is a bullish momentum on the week, on the Nifty, and exactly that is what happened. That's why it bounced back upwards. Now you have not a bullish momentum, you have a bearish momentum. We'll see in the next slide. That means there is a reversal chance on the Nifty. Now ADX indicator is a trend indicator showing bullishness, and it is rising in the bullish zones with great strength. Strength is above 50, right? So that is clearly on the weekly, monthly, daily, or time frame for the Nifty. Bank Nifty also now it is at having good strength above 30 levels with clearly in the bull zones from the trend indicator ADX. DMI and DMI positive is bullish. ADX is having good strength. Look at this, the momentum. It's in the bull, clearly in the bull zones, and then bouncing up. Bank Nifty right side, clearly in the bull zones above 60 RSI. Now this is the divergence of the bearish one that we are talking about. Price is going down, and then price is going up, and then momentum is going down. So there is a chance that it can fall up to 17,350, 450 at kind of levels, if that is the first level, right? If it works out. Remember, this is not confirmed. Trend indicator radius, you can see the strength. Look at the strength above 50. It's bullish zones on the left Nifty, and the right Bank Nifty. It's about 35 levels, right? And the ADX has turned upwards now with strength, increase in strength. Trend and momentum super bullish on both indices. Look at the VIX. The VIX shot up, right? Last week again it shot up, right? Obviously, it was a 2% up move. 16.9 is where it settled. The open interest data of the futures is showing that it's a long build-up that has happened on the Nifty, and the Bank Nifty is showing a long environment which is bearish. People who are long are now shorting the Bank Nifty. So that bearishness can be seen in the charts also, right? So the highest open interest writing is seen at 18,500 and then 18,000. So it's quite far away. Means it's 18,000 is just like kissing distance away, right? And supports are very far also. So anything can happen. The fight is between 17,000 and 18,000, such a wide range, right? 16,500 is the support. Highest is 17,000 foot riding, then 16,500. Remember, this is a monthly expiry. Anything can happen. So the range is justified. So Bank Nifty highest call rating is in 38,000 and 40,000 levels. Big resistances close by and far away. Then the put rating is in 37,000 and 37,500. So 37,500, right? So that is where the coming expiry of the monthly expiry is going to happen. Put call ratio is 1.12 bullish Nifty, but 0.89 is not that bullish, but it's okay. Not reasonably bullish, you can say. The week shot up 2% again and settled at, we saw that near to 17 levels of new RiskReward. Now implied volatility, it's 14.8 and the HIV is less than that, which is fine, but IVP is still at 26%. It has to improve some more for the sellers to benefit from it, right? So the VIX level is happening, right? New range formation is happening, as we discussed last week also. So this is the charts for the open interest data that is showing. Look at this big resistance that is seen at 18,000 and 8,500. This is 38,000. All right, so let's look at how the sectors are performing. Right, so the IT index definitely bullish, but look what happened. It moved up 6% last week, right? But the problem is the daily it is forming a gravestone candle pattern which is bearish, which is probably signaling there is a weakness. There is a chance for a reversal. This happened on Friday, but otherwise 6% of move happened and dollar string is heading upwards. But it is at a resistance zone. You don't know whether the dollar index will take it up above that resistance zone or not, right? So there could be some correction, some reversal, some consolidation that can happen at this extent, but otherwise it's super bullish on momentum, trend, and everything else, right? FMCG again moved up 2.5%, but it just like the previous week it gave most of it, but it formed a green inverse candle. It closed green basically. It has a bullish reverse divergence. That means FMCG is further again, it's a defensive sector, but still it's rising up when the market is rising up, and it can further move is what it indicates. Right. Metal slipped down 1%. It's in the sideways and formed a hammer. Hammer shows that bullishness is still there, and there is a bullish reverse divergence also seen in the daily. so which is positive. So metals could also bounce back, but momentum is in the weekly is still to catch up, right? The auto sector also is reversing. 1% up move happened last week, and short-term momentum has gained, right? But weekly momentum is supposed to catch up, and we'll have to wait for that. Pharma sector formed another indecisive candle, right? It's from May 6 and facing resistance, so avoid pharma for now. Reality is super bullish. That is super bullish. The cup and handle broke out once again, and 22% move in last 1 week. Can you believe it? Right? Sector is super bullish, and it's the time is for to make long-term entries. It's a candlestick on cup and handle breakout on a weekly. It's powerful. It can further move up. Although there may be corrections in between that can happen, right? But the candle formation is already handle of the cup and handle is already formed, and breakout has happened last week. Now it could go further up is what I feel, right? Now institutional participation, if you see Fyers saw just a little, last few days. One day selling was big. There was a Fed event related selling that happened, but that took away all the other days gains of buying from the Fyers side. But overall net to net it's 10 crore of selling that happened. But DIS bought 3,000 crores last week, and that's what held the markets up, right? Derivative data also seen some dip. That is institutional, but no worries there. Global markets, if you see, it recovered and formed a hammer bounce pattern on all the indices, S&P 500, Dow Jones, and Nasdaq. All of them is showing some kind of bounce from the big size, and so it is a recovery from the Fed event. That is basically that happened, right? So outcome was positive, and the market reacted to it. So the dollar index has further gained, and you can see that it is at a resistance zone, right? W pattern breakout has attempted last few weeks back. It failed and then dipped. Now it's the second attempt that happening. So whether the dollar will strengthen further is a question, or it will resist and consolidate the same zone for some more time. We don't know. But the interesting thing is the crude oil has shot up 21% in just 5 weeks, and it is at 77 level. It's not good for our economy. 77 per barrel crude oil, right? So the INR currency is heading up, and then it closed green. Actually, the dollar index also is performing, so probably because of that USD INR also shot up, and it is heading to the channel top of 74 levels. In the gold accordingly fall 5% of move in 3 weeks, falling down. It has slipped away from the major resistance zone. This is a concern, but we could as long as the dollar is healthy, there will be some weakness that can be seen, but after that it will bounce back within the channel range, attempting to make another top hit at the channel is what I feel. Now the actionable stocks for the week, you can see on the left side there's a DLF. Of course, reality said 21% weekly breakout in the index means definitely all reality stocks will move, and DLF is breaking out of the channel, and maybe a good item. Momentum is also good enough. Now the lines on the right side, you can see that is also having a rounding pattern breakout that happened, and then it retraced to the previous support level, and then again it bounced back after a change in polarity bounce that has happened. Previous resistance was taken as a support now, and it is moving up. So immediate entries may not be stop loss will be kept definitely at this previous resistance zone, but the entry has to be well planned. It is retraced slightly, probably some more retracements can be seen, and the fib extension has to be drawn, and then accordingly you'll have to take at a retracement level only you have to make the entry, because it has broken out quite a bit from that neckline of this, so we'll be cautious, but there is potential for it to further move up is what on a swing basis. This is not intraday, neither of this is intraday, it's a swing, right? And Reliance probably may fit in a positional play, but make sure the entry is under retracement and the stop loss at this breakout zone, right, where it took support early and bounced back early. Now this is an index play, actionable, that is on the indices Nifty. You can see that this is kind of a Batman kind of strategy, right? This is giving good POP, probability of profit, and then RiskReward is also not very bad, right? Going good range, that is a big thing. 800 and 260 and 18,263 and 17,400 is the support zone, so it's fair enough. Adjustments have to be ready for the adjustment, otherwise you'll incur more loss if you're taking more lots, right? Position sizing as per your risk appetite, and then it's a credit strategy, and it doesn't require much. It's giving good range, and that's relatively safe. If the market is not making any violent moves, and capital required is also reasonable, right? Yeah, so the exit has to be planned at the peak of this Batman's horns, so to say. Yeah, so just to wrap up, the market is formed a spinning top at an all-time high levels, on both the indices, and there is a bearish divergence, right? But the momentum and the trend is intact in bullish zones, and it is only 52 points away from the kissing distance from the 18,000. There is no other option but other than being bullish. But the thing is, these two divergences spinning top and the fact that it is not corrected too much is a concern. So there could be some small reversal indication. Things can come. So it will be cautiously bullish. Clearly, the verdict is that. India VIX at 70 levels. The market is moving up and the VIX is not coming down. The VIX is heading north, which is also a concern. Anyway, it goes about 20. We have to be very cautious. Option sellers can expect a crash if VIX is rising up, for swing trades or weekly trades or monthly trades on the options strategies, right? So profit booking can definitely come at 18,000. So if it is going further up, definitely is going to be a bull trap for option intraday buyers, right? Or any kind of long place. So this is a mistake. It's not a ration spread, it's ratio spreads. Ratio spreads is something that we have seen previously. The Batman strategy is kind of a ratio spreads where you sell two lots within the range and then buy two lots inside the range, right? So that could work out. Vertical spreads is the way you have to go instead of going plain naked, because profit reversal can happen. So vertical spreads and ratio spreads is what we have to look out for. Personal trades has to just keep in mind exactly where they have to exit the resistance at the support breaches, and you have to trade as and when the resistances are broken. That's all. I hope this helps you to understand what happened in the last several weeks in the market in both the indices, and what sectors are breaking out, and how accordingly we have some actionable strategies in stocks and indices both for you. So it's not that you should copy exactly the same thing. You can get and form your own perspective and then take the trade as per your risk appetite, right? Hope it helps you that way, and happy trading and happy learning. Thanks for watching.